Hi everyone, my name's Chris Tubby. I'm founder of Trading for Tomorrow, and I'm just going to run you through some macro and then some charts. So I hope you've had a good weekend, and let's crack on. Okay, so yes, I mean in the US, stocks had their worst week since March last year. The S&P fell 1.7% and the Nasdaq 2.7%. You know, investors are just falling out of love a little bit with this AI at the moment. And of course, you know, obviously the data is impacting stocks as well. And talking of data, so non-farm payroll came in below expectations, and jobs were revised down again for July and August. Now, unemployment did improve slightly to 4.2%, and of course that's if the data is accurate. You probably know by now my thoughts on all this data. You know, is it accurate? You know, all these revisions, when you look at all of these surveys, the amount of people that reply or don't actually respond is you know, impacting all of that. And yet we treat it all as gospel, and we trade and take positions on it and believe it. Okay, so the US economy may not be as strong as most think, partly because of that. And, you know, COVID cash is obviously just a distant memory now. You know, it's hard to think, you know, 4 years ago for COVID now. And of course, you know, now the focus is going to be sort of moving away from inflation to jobs and debt. And of course, the latter could create potentially the next crisis. You know, when you look at household, corporate and government debt, and then of course on top of that, you've got this sort of shadow bank debt such as buy now, pay later and credit cards, and of course auto loans as well. And you know, you see some of those defaults increasing. Now, we'll soon have the next FOMC meeting, which is going to be, the rate decision will be on the 18th. I'm going to stick to my expectations of a 50 basis point cut. And you know, it must be boring for you guys by now because I've just been saying it for so long. But, you know, it's just the way I've expected it to go. And although a soft landing is still possible, I think also that there is a greater chance that the economy is cooling faster than, yep, you guessed it, back to data is showing. And of course, that's no surprise because, you know, data is lagging, or the majority of data is lagging. And it's usually months behind what's going on in the real economy. Yellen's mentioned that she's likely to step down with Biden. I guess that's going to be a given if Trump wins the November election. And Trump and Harris have a live TV debate on Tuesday. So that could be interesting, and it could have an impact on crypto as well. So, but I'll come to that a bit later. For me, OPEC's hold on oil is just weak now, and especially now sort of the US has gone from a major importer to exporter over the last 10-12 years. And oil dropped back to the lows of the year. Gold tried to rally Friday, but just followed stocks lower eventually. Although, you know, it's still hovering around that $2,500 at the moment. The dollar itself finished the week pretty much unchanged. You know, okay, the Fed's going to cut rates. Yields are going to drop. I mean, the 10-year now is sort of 3.7%. But, you know, there's many other countries that have started or are going to follow the US and the Fed cutting rates. You know, Bank of Canada cut rates last week. Now, Japan's going to be one of the few exceptions, with another rate hike likely before the end of the year. Now, Bitcoin dropped sharply during the week. It fell over $7,000, around about 4.5% back to the low 50s. And that's why I sort of mentioned a little while ago that, you know, if Trump puts on a sterling performance Tuesday, we could see a little bit of a bounce, but you know, otherwise it's just sort of sensing that weakness in the economy. Moving on to Europe, Macron appointed the ex-Brexit negotiator Barnier as Prime Minister. Obviously, he's hoping to prevent a further impasse, and that's really important because time's running out for the government to agree to a budget or even perhaps set one. Staying with Europe, I mean, German in sort of industry continues to struggle. You know, there's weak demand in Europe and, of course, China. Plus, of course, for Germany, that advantage of cheap gas from Russia's been lost. I think maybe their only saviour could be that the publics just seem to be reluctant to accept EVs at the moment. You know, it's difficult to sell them once you've bought them, and, you know, finding charging stations can be a little bit difficult in some countries. You know, in the early days there was a few incentives being given, but I think they've been removed. So, you know, that's just something. Now moving on to India. So despite their economy being the strongest, you know, and I've been mentioning this since last summer, but they certainly benefiting from, obviously, you know, orders, investors moving, you know, away from China, but there's a need to create 115 million jobs by 2030. You know, that's going to be a big challenge for them. Moving on to sort of the more geopolitical tensions, Israel PM keeps to his hardline approach, and workers are striking in Israel in protest, especially with, you know, there's still some hostages around and some of those are being executed. Ukraine could soon use long-range missiles deeper into Russia, and Russia continue to attack Ukraine's power supplies. Just going back to Israel for a second, so Israel, Hezbollah have been exchanging sort of missile strikes and drone strikes over the last few days. So, you know, still a lot of tension there as well. And just to mention this week's key data, of course, we've got the ECB meeting on Thursday, expect a rate cut. And we've got US inflation data out this week. So, again, just watch for the markets. They're going to have a move. You know, it's a great time now between now and the end of November with central banks, rates, inflation, unemployment levels, you know, and of course in November we've got the US election. So, you know, there's plenty to keep us sort of occupied. I didn't include December because, you know, as pro traders we always say that August and December are for the needy and greedy. It's for the people, you know, because the market's thin. A lot of traders take some more time off. I mean, I always used to go away for the whole of December. But anyway, that's another story. So that's it for the macro. There's another couple of slides, and then please stay with me because then I'm going to move on into the second part that I do, where I do some analysis on a few of the products that I trade. Now, I just want to sort of just talk a little bit here about my services that I offer. So there's a daily newsletter that includes global news, headlines, my views, full articles. That is a subscription service. There's one-day workshops. You know, this will help you to discover if trading could be your next career or even just a second income. Otherwise, you know, maybe you're already trading, but you know, there's a few gaps that you'd like to fill in, and I can help you with that because that will accelerate your trading and your performance. And then there's a 1 week intensive course. You know, that's going to make you feel competent and confident after just 1 week. It's going to give you those foundations that you need to build your trading career on. And, you know, if you've got that in a trader, we'll find it. And now that does also include a free trading challenge. Then I do a Flexi Masterclass, which includes 6 weeks of guided learning. They can be split up, you know, you don't have to take them all at once. And this is designed to provide you with all the knowledge and trading tools that you're going to need to navigate any market and also on any asset class. You know, I trade them all. And as I say, you know, you can spread those weeks out over months if you need to. It's no problem for me. And again, that does include a free trading challenge. Now, trader mentoring, I'm doing more and more of this. And, you know, this is to help you reach that next level time and again. And, you know, I'm doing much more in the way of one-on-one sessions right across everything that I'm doing now, rather than sort of looking for big groups. I do provide a lot of trader educational content to individuals, exchanges and brokers. And as you know, as I mentioned earlier about the trading challenges, you know, if you're looking for a funded trading account, then you know you can contact me for details just about the ones that I use, or you know you can sort of take one of the courses where I'll give it to you for free at the end of it. Okay, so then moving on to our disclaimer, just to make you aware that trading does involve the potential risk of loss of capital and is not suitable for everyone, although hopefully it is for you. And many companies provide leverage, so just be aware that you can lose substantially more than that initial investment. Everything I include in here is just purely for educational purposes. I'm not trying to encourage you to trade or invest. That must be your decision. And of course, you know, before you make that decision, you've got to consider the risks involved, definitely your financial situation, your level of experience, and your risk appetite. And of course, it's important that you only risk capital that you're prepared, but also that you can afford to lose. And if you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. So many people come and find me after they lost money, which is sad. You know, they should come to me before. And yeah, so listen, that's it for part one. I hope to see you in part two, where I'm going to do some technical analysis.